Getting that funded account is the dream, but let's be real. Passing the prop firm evaluation can feel downright impossible sometimes. So today, we're going to break down a complete step-by-step blueprint to get you that $50,000 account. Seriously, if you've ever felt stuck, this is the plan you've been looking for.
I mean, this is the goal for so many of us, right? A $50K funded account. It's the key that unlocks some serious capital, and it proves to yourself and everyone else that you've got what it takes. It's not just about the money, it's about freedom, and it's a huge level up for your trading career.
But you know the feeling. Those super tight drawdown limits and the big profit targets, it can honestly feel like the whole system is rigged against you. It's a massive challenge. But what if there was a methodical, repeatable way to actually beat the game?
Okay, so first things first. Before you can win, you have to know the exact rules of the game. This isn't just about your trading strategy, it's about navigating the very specific world the prop firm puts you in.
It all starts right here. You're handed a $50,000 account. This is your capital, your starting point. But, as we're about to see, it's the rules attached to this money that really define the entire challenge.
And here we go. Rule number 1. This is the one that trips up so many traders. You cannot lose more than $2,500 or 5% in a single day. Think about it. One bad day, one emotional trade, and poof, you're out. This is our first major boundary.
Rule number 2 is the big one, the overall safety net. Your account balance can never, ever drop below $45,000. That's a total loss limit of $5,000, or 10%. This is all the wiggle room you get for the entire evaluation.
And finally, the objective, the goal, the finish line, is to make $4,000 in profit. That's an 8% return on the account, all while staying inside those tight loss limits we just talked about. So the question is, how on earth do we actually do it?
All right, listen up, because this next part is, without a doubt, the most critical piece of this entire plan. This isn't about some secret indicator or a perfect entry. No, it's all about your money management. This is the engine that's going to drive you to that 8% target.
So this blueprint gives you two paths to choose from. On the left, we've got what we'll call safe mode, where you risk a really conservative 0.75% per trade. It's a bit slower, sure, but it's way more resilient to a string of losses. Then on the right, you've got a more aggressive mode, risking 1%. You might get there faster, but you have way less room for error. The clear recommendation here? Go with safe mode. Here's why.
And this quote right here just nails it. Prop firms are not looking for a gambler. They don't want someone who gets lucky once. They're looking to fund consistent traders who know how to protect capital. Choosing consistency over aggression is the exact mindset that's going to get you across the finish line.
Okay, so with our risk management locked in, we now need a playbook of high probability setups. These are the specific, repeatable tactics you're going to use to execute the plan. We're not just guessing here, we are patiently waiting for our specific edge to show up.
First up is your bread and butter, your go-to strategy, trend continuation. The idea is super simple. Find the main trend, wait for price to pull back into a key area, like a supply/demand zone or what some call a fair value gap, which is just an imbalance in price, and then you enter after you get confirmation. It's a super reliable approach, especially on things like NAS 100 and gold.
All right, next up is a more advanced setup, the liquidity sweep. This is a bit of a pro move. You basically wait for the market to trick other traders by running the highs or lows from the quiet Asian session. As soon as you see a strong rejection of that move, you jump in going the other direction. This setup can lead to some really nice high-reward trades.
And finally, we have a strategy tailored specifically for Bitcoin. Because let's be honest, BTC plays by its own rules. It just loves to go sideways for a while and then explode with volatility. So the plan is simple. You identify a clear range, wait for a decisive breakout, and then you get in on the retest. You're basically capitalizing on the very nature of Bitcoin itself.
Okay, so we have our risk percentage, we have our strategies, but how do you actually translate risk 0.75% into an actual position size on your screen? Well, that's where lot size calculation comes in. This is what turns our abstract plan into a concrete action.
And here it is. This simple formula is your absolute best friend. Seriously, it makes sure that no matter how wide or tight your stop loss is, you are always risking the exact dollar amount you planned on. You calculate this for every single trade to maintain perfect, boring consistency. And hey, to make things even easier for you, get ready to screenshot this. This is your cheat sheet for the recommended safe mode with that 0.75% risk.
For a pretty typical setup on gold, NAS 100, or Bitcoin, these are the exact lot sizes you'd be using. No guesswork, no stress.
And if you do decide to walk the more aggressive path, here's the cheat sheet for you. Now you're risking 1%, or $500 per trade. You'll notice the lot sizes are bigger, which, yeah, means higher potential rewards, but it also means a much higher risk.
Okay, we've got the rules, we've got the risk model, the strategies, the lot sizes. Now let's put it all together into a simple, stress-free daily routine that you can actually follow. Here is a pro tip that will save you from so much overtrading and decision fatigue. Just focus on one main asset per day. So on Monday, you are a NAS 100 specialist. On Tuesday, it's all about gold. This level of intense focus is an absolute game changer for finding those A-plus setups.
Think of these as your account's non-negotiable seatbelts. These are the golden rules. If you hit your daily profit goal or your daily loss limit, you stop trading for the day. That's it, no exceptions. You also stay away from major news, and you even lower your risk after a winning streak to protect your profits. These rules are designed to protect you from yourself and keep you in the game.
All right, we're in the home stretch. This is where we prove that this isn't just theory. Let's look at a realistic simulation of how this blueprint gets you to that 8% profit target in a calm, controlled, and totally achievable way. This chart pretty much says it all. If we assume a very realistic 50% win rate using our safe mode, that's risking 0.75% to make 1.5%. After just 10 trades, you're already up nearly 4%. What this means is you'll very likely hit that 8% target in about 20 trades, which is maybe 2 or 3 weeks of calm trading. It's not a sprint, it's a perfectly paced marathon. So, there you have it. A complete blueprint built on discipline and proven strategies, all designed to get you funded. The plan is clear, the path is set. The only thing this blueprint is missing is your execution. So, the real question is, are you ready to build?